Imagine you're on a boat, drifting peacefully across a crystal clear lake. It's a serene scene, much like how we often envision our financial journeys, smooth and tranquil. But just below the surface, there might be rocks, currents, or sudden storms. This, my friend, is what financial risk feels like. It's the uncertainty that can either capsize your plans or propel your financial boat to new and exciting horizons. Welcome to the Risk Master Podcast, where today we're diving deep into the waters of financial risk assessment, a topic that may sound daunting, but together we'll decode it with the clarity and simplicity of a late-night chat with a mentor. Let's start by acknowledging that risk is an inseparable part of life, much like change. Every choice you make involves some degree of risk. Deciding to switch jobs, investing in a new venture, or even saving for retirement, each decision carries uncertainties, and understanding these uncertainties is the first step towards mastering financial risk. Consider this. A well-known fact in the world of investing is that higher potential returns usually come with higher risks. But, like a roller coaster, the thrill of potential gains can also bring the anxiety of possible losses. Assessing financial risks is all about balancing that thrill with stability. Much like tightening your seatbelt before a ride, it's about being prepared. Now, how do we assess risk? It begins with knowledge and understanding. Picture a lighthouse guiding ships through foggy nights. In the financial world, knowledge is your lighthouse. You need to know what you're investing in, be it stocks, bonds, real estate, or any other asset. The more you know, the clearer your path becomes. Research and education are your allies here. Real-life examples abound. Take the dot-com bubble of the late 1990s. Investors poured money into internet companies without fully understanding the underlying businesses. The burst of this bubble serves as a cautionary tale, a reminder that blind faith in the market can lead to turbulent waters. Instead, a little skepticism and a lot of homework can help in navigating such risks. You also need to embrace the mental model of diversification. Imagine your investments as a basket of fruits. If you only have apples and a blight hits, you lose everything. But if your basket holds apples, oranges, and bananas, you're spreading out the risk. Diversification isn't about having a little of everything, but rather about strategically balancing your investments to minimize risks while aiming for growth. Now let's talk about the psychology of risk, an area where emotions like fear and greed play significant roles. Fear can paralyze us, keeping us anchored in safe harbors, while greed can lead us into turbulent seas without a life vest. Understanding these emotions is crucial because they can color our perceptions of risk and skew our decision-making processes. For instance, during a market downturn, fear can drive investors to sell off assets in panic, often at a loss. Meanwhile, in a booming market, greed might push one to pour money into overvalued stocks. In both scenarios, emotions cloud judgment. A reflective and disciplined approach, much like a seasoned sailor who reads the weather, helps in making rational decisions. Assessing financial risk also involves setting clear goals and understanding your risk tolerance. Think of it as your personal weather radar. What are you comfortable losing? How much volatility can you handle before you lose sleep? Knowing these limits can guide you in choosing investments that align with your financial goals and peace of mind. Another insightful approach is thinking long-term. Short-term market fluctuations are akin to waves that ebb and flow, but a long-term perspective allows you to see the tide's overall direction. This mindset helps in weathering short-term volatility and focusing on building wealth over time. In practical terms, assessing financial risks isn't a one-time task. It's a continuous process of evaluation and adjustment. It's like tending to a garden, requiring attention, care, and adaptation to changes. Regularly reviewing your portfolio, keeping an eye on market trends, and staying informed are all part of this ongoing journey. As we wrap up today's conversation, remember that risk isn't something to fear, but rather a force to understand and manage. It's the wind in your sails, capable of pushing you toward your financial dreams if harnessed wisely. Reflect on your goals, educate yourself, know your emotional triggers, and keep a balanced perspective. In the end, financial risk assessment is about making informed decisions that align with your values and vision. It's your journey, and with a bit of knowledge and a lot of thoughtful consideration, you'll be well equipped to navigate the ever-changing financial seas. Until next time, keep your compass steady and your eyes on the horizon.